Good morning, ladies and gentlemen. This is Clueless Day Trading Frank, and it's a quick market condition update at 8:51 a.m. on May 2nd, 2017. I'm going to go through this real quickly, next 15 minutes or so. So take a few minutes to listen to this. What you see in the background is one of the most powerful trading charting platforms that I use in order to master volatility, as I keep on promoting on my service, that the Quad Algo HFT platform, that's QUODD, which incorporates bar charts as their base for the charting. And I call it the Algo HFT because over the years, and I've been using it for more than 12 years now, I found out that they seem to pick up data which doesn't seem to reflect immediately in a timely manner on other platforms. Thinkorswim is terrific, but Quad is really meant to be for precision traders who are looking to buy exact, give or take a point or two, inflection points, which tend to give outsized results, as we see almost every single day when we trade the SPX or when we're trading some of the high momentum stocks and things like that. Okay. Just a quick, so I'm going to just focus on that for now and just walk through some basic pointers specifically for newer members who have come in, and some of the more non-technical traders in our group, so that they are aware of uh, what the messaging is from these quad algo HFT charts when I put them across. So a couple of quick things about the market. We are certainly in a pretty volatile market, even though between tight ranges. Sometimes the ranges are wider than we expect, but it is still volatile. It is certainly not a straight line up, that's for sure. There is a good possibility, as we'll go through this chart, for you to see, which I presented multiple times on my real-time Twitter feed, that we are going to test the upper end of this level, and that would be retesting the old highs of 2,400 or so in the SPX. What you see behind you is basically the SPY. I'm actually going to stick to the SPY for now because the chart is much clearer here, and go from there. A couple of things to keep in mind. We have had extremely solid winners in the high momentum stocks, whether it be Tesla, Google, Amazon, Apple, Netflix, you name it. One of the key things to remember, and if you just want to remember one single thing after you listen to this quick video cast, is the hardest thing to do for a trader and investor, but specifically for a trader, is to buy, is to basically buy runaway high momentum markets, or high moment, I shouldn't say markets, but high momentum stocks. Buying on an uptrend where it just keeps on going like that, and jumping in and then and catching the profits is one of the hardest things you can do. If you don't believe it, just look at yourself in the mirror. Okay, if you miss the move here, you are definitely a little voice in your brain, which is basically the emotional part of the trading aspect, which most of the times doesn't work, is telling you not to buy here, and then you keep on seeing it go higher. Priceline is a glaring example of that. And so keep in mind that the hardest thing to do right now on some high beta momentum stocks, and we play a whole bunch of them, from the biotech Regeneron type of companies to the FANGs, is to buy higher. Now, when you buy higher, one of the most critical aspects of what happens is that you have to manage the trade. Because if you're coming in really late, and it's moved up 2, 3, 4 points, and you're not taking profits, not 2, 3, 4 points, let's say 5, 6, 7 points, you're not taking, scalping some profits out, it's possible that the algos are going to come in, slam it at a certain specific level, which I keep on showing on my charts. All my levels are clear. Okay, and you got to mimic that on your screens, or at least mentally remember what those numbers are. They're going to take it away from you. This happens all the time. Trade management is key. And the only way you can get better at trade management and skills, and I'm talking from personal experience, is you need to be very technical. You need to be very tactical. You don't need to be a rocket scientist. You just have to look at my charts clearly, get the messaging that's coming out of it in the form of levels and pivots and all kinds of stuff, and basically manage your trades in between those. So that's it. In the meantime, we are in a topping process. We will get 2, 3, 400 point type of moves coming up very soon. It's going to happen very suddenly, and it's happened before very suddenly. So you have to be prepared. Be flexible, Don't go overboard with any one particular position, and you should be fine. Small profits on multiple stocks, holding some of the swings is the best way to go. Is it simple? Absolutely not. If it was that simple, everybody would be making $1 million and everybody that you know around you would be a trader. No, trading is one of the hardest skills that you will learn, and it's one of the most rewarding skills that you will have with you for the rest of your life. There's an old saying, traders never retire. Traders trade till they die. End of story. So saying all that, let's take a look at this algo chart. One of the key things that I keep on focusing on, real simple, is here, the slow stows. Okay, the slow stows basically give me an indicator whether it's overbought, oversold, what the risk reward is on the upside. Generally speaking, I even put markers. I spend a lot of time constructing these charts so that everyone can easily look at it and not try to analyze too much on their brain. Every time the slow stow comes below 20 or goes towards 0, you get some sort of short-term bottom. Okay, it's not 100% proof, but it's at least it's got. I back tested these things, and it's more than 80% accurate. So look at this here. So when you see these big red candle bars, and if you're just a price watcher, you would think, okay, it's definitely going to come down here. Well, no, the slow stows got oversold or almost got oversold. There's a and then you start to see the reversal candles, which we play like a fine violin. Okay, then you get the 3 reversal candle move, you got to sell. In fact, you should sell after if you caught it down here, which most of the times we do, then after the second candle move, you should be taking profits. There are lines drawn over these charts. There's your downtrend line. These are the uptrend channels. These are the moving averages, the 34 and the 50. Most importantly is the pivot. This yellow line, generally connotated in yellow or light orange, is your pivot. It goes above pivot, terrific. It goes below pivot, you're going to have a quick pullback. All right, crossed over pivot, big short squeeze came in, you see what happens. Now this happens repeatedly. For a lot of the newer members who are listening to this, I'll tell you, we have had ROIs on our weekly options in the range of 60% going all the way up to 400% plus. The 400% type of moves generally occur over a 48 to 72 hour period, if not a 24-hour period, if we get a big burst in the market, like for example, in late April. So we're not here to play 20-30%. Yes, you can scalp 20-30% on SPX calls or puts. That's fine. But I'm talking generally speaking, look at the returns that we're delivering on the big cap stocks, which are moving the way my charts are showing. It's hard because it's easy to take profits and feel good but it is the worst feeling to see it run up another 20-30 points and say, why the heck didn't I hold it? That's your job to manage that. That's your risk management. That's your head, which tells you how to do that. Practice makes perfect. Don't be happy with 20-30% returns on a particular trade, especially in a high momentum stocks, because there's an old saying in the business, oh, a profit is a profit. No, that's complete garbage. Profit is not a profit. A profit is a profit when you have taken more than 50% of the meat in the middle. That's a profit. Okay? That 50% could be 120% on your original initial trading capital. Now that doesn't mean that you have to take half your book and trading capital and put it in there. You do it in small lots. So don't be satisfied with mediocrity. Okay? Don't be satisfied with I made a little bit. No. Go for outperformance. In life, reach for the stars. If you fall in the mud. So but that's the way you got to think about it. Can't be just a small fry all the time. I keep on telling myself the way the way my charts are constructed and the way they move, I should be making a lot more than what I do. But I'm still pushing it every day. Many of you just kind of sit back and, well, I took a little bit, that's fine. No, that's not fine. Eventually, it erodes your mental capability of your brain as a trader, and you never really get up there to what you should be. Everyone is far away from their peak performance. I know I am. Your biggest competition is yourself. So push yourself harder to do what is necessary. My content that I'm delivering, if somebody followed it like a robot, and I agree, nobody's a robot. Okay, I try to be robotic, but I'm still human. It's after all real money. But the bottom line is, if you followed it robotically, you would have 3, 4, 500% returns literally in a month. Imagine what those numbers can be. On that note, let's take a look at this. So basically, when the slow stows get oversold, it's real simple. You tend to get a reflex bounce. Looking at this chart here. Oh, before I go, on top this column, which I expand once in a while, is basically your fast stows. Now the fast stochastics are simply which can reset in about 15 minutes. These are reliable, but they're I use them in conjunction with the slow stochastics. Given the heavy volatility in the markets, the slow stows are moving rather quickly and faster than what they used to be. They used to be slow. They used to take time, like a day or two. Now it's happening within hours. And that's purely because we are getting very sharp volatility on the market. Um, and that's exactly the case. The volatility is coming from all different fronts: earnings, political news flashes, overseas events, all kinds of stuff. You all know that. All this is posted on a market storyline on the real-time feed with the alerts, with some precise comments, analytical comments on how to interpret the news. And this is really the only service that walks you through in this such detail through the market on a daily basis. And people who have been with us know that very, very well. Good markets, bad markets, doesn't matter. I'm here to basically guide people through to the best of my ability. So fast stows basically get oversold and they get overbought real fast. If you're looking for quick trades, look at that. Okay, you can do that. These are the 20-30% type of things. You buy a call at 3, they'll be $4 within a matter of maybe 20-25 minutes. But then comes the quick reset. There you go. All right, then it bottoms out, then it goes here. The slow stows, if you notice, in comparison, is more of a flow, is more of a wave. So this is what I follow. So as the market opens right now, this is real time. Yes, pre-post market data. You will see, and I'm going to expand this for a minute. You're going to see that it's starting to get overbought. So by the time the market opens, if the futures are up, let's say, a little bit more, or by the first part of the morning, the slow stows are going to get overbought. Now, this I match in with these levels that I keep on showing. So when you look at the levels, I have my lines drawn. This is obviously where the pattern completion is completed, but I believe that there's going to be some major resistance here. There's a cluster of supply here where the market failed to move higher and then fell. Another line here. Now all these are very specifically drawn and numbers put pre-market as well as during the day on my real-time Twitter feed. I have to repeat this. Many of you are not being technical. Use your gut feeling with the two technical tools that I'm giving you, and you'll see the difference. No one's asking you to basically switch your whole trading mode and go into a pure tactical mode that I do. And I don't even do completely pure tactical mode. I'm analyzing a lot of information in the background and I'm processing it. And then, of course, the levels, you will see how close they are. So saying all that, slow stows get oversold. It generally is a buying opportunity. And then as you can see, futures are down about a quarter point, but this is still diverging up. And once it gets up here, it generally tends to top. You can see that. Okay, there you go. Very reliable. You don't have to do the work. I put it out there. What you have to do is basically read the message that I'm putting across. Now, there's a heck of a lot more indicators under this, but I use the simplest ones to walk people through it. Simplicity is key, but you have to understand the complexity of these charts. Bollingers, keep an eye on the Bollingers, what they are. This is somewhat of a pinch Bollinger. And here's your yellow line, the pivot that was from yesterday. It's going to reset this morning. Yesterday's pivot was 2238.31, and we had some absolutely powerful precision trades right off these levels twice during the day. Okay, on Monday when it slipped below the pivot and then reversed hard, and this was the opening. Then the pullback went up above the DT line, the red line, the downtrend line, and then continued forward. So bottom line is that this is just in one day. So if you look at this chart here, what it's telling me is that there is a, let me see. the recording screen can't really fit everything, but bottom line is this is still a constructive chart. Uh, you have a, if you want to look at it this way, you have a large cup. You created a handle. Now it's a sideways channel, and we need to break out here. And if we do break out here, that's not the time to get excited. That's the time to sell. This is the sell zone. This is the sell zone. Unless we completely break out over this, in this case, you have a short-term opportunity. Remember, things are extremely fast. Could be a couple of hours, could be a day, to basically sell stuff that you bought on the lower end. As you see these charts more and more, you'll see that they make a lot of sense, and you know what you're looking at. So overall, this is one example of the quad charts. The screen is not fitting everything. This is where we are pre-market. The yellow line is important. That's the 5 SMA, which is a trader's friend. If it's pointing up, that means the market's got some support. A lot of the times, I'm looking at the minute details of how it's kissing the 5 SMA, bouncing off that, and that's in. But you can train your eyes to look at that too. All right, all these levels are in place. This is a little bit of selling here. You can see that immediately. Futures basically probably popped down about a point on that little move. But real simple. I don't want to spend too much time on this. 16 minutes done into this video cast. Slow stows, focus. Sometimes I put arrows. A lot of times I put markers or just simply look at it. Look to see the candle formations. As you can see, heavy volatility, straight up, straight down. Candle expansions, buy them. Buy the first candle expansion. Second one is very good. Don't wait around till the third one up here. Sell somewhere in this zone. That's where that's called risk management. Let me bring in a couple of other quick charts for people to see. This is the swing 533. I'm sorry. This is your bear with me one second. This is your standard investing.com channel chart, and you can see here that the channels are exactly here. We are not even in, we haven't even entered the, if I call this channel 1, we haven't even entered channel 1. These are E-minis, so basically by the time you reach 23.95, that means you're retesting the highs in the market, right? It's really as simple as that. Trying to expand this, but okay, I'm not going to waste my time. So bottom line is, a bull will say, hey, we haven't even entered this channel, so we still got room to go. This 2400 and change means that we reached that projected bullish level of 2410 to 2420 on the S&P 500. Can it happen? It can absolutely happen. 2377, I've kept on posting, is on the E-minis, is basically your extreme support level for now. Because once you lose that, then you got room to fall into this 2358 mark, which by the way is a gap fill, which will happen. When exactly it's going to happen, I don't know. I'm a fast messenger of the markets. If I see deterioration, a large red candle, something like this, and it breaks below the 2377 level or 2376.95, whatever the case, then you got this open. So there comes in the short trade. This is the pinch Bollinger. Markets are tight. There are some great earnings. Most of them have been very strong earnings. And one of the key things about the market condition right now is that for the first time in many, many years, S&P 500 companies are delivering top-line revenue growth. What does that mean? That simply means they're actually making money. Okay, not just fudging the numbers at the bottom to make the earnings look good. They have top-line revenue growth. In other words, end user demand is good. So bottom line is that that's something to seriously keep in mind on a fundamental basis. So one can say the market's overvalued, this and that. On an inflation-adjusted basis, something that you don't hear about too often, the NASDAQ, which is right here, that I'm going to bring in. This is your QQQ. Right there. Look what the Qs are doing. Now, I posted this chart before, and these Qs are just, this is your channel chart on a daily. They're breaking out. So the growth factor is really coming from technology companies, as we all know, and money managers, not little fries like you and me, are ready to pay up for growth. You have to pay up for good things in life. Doesn't mean it's a one-way runaway train, But as you can see here from this just a quick analysis, this hasn't even come close to really topping. It could continue for a whole bunch of days and stay in the overbought zone. The longer it stays over the 75 level on the slow stows, the 75.80 level, that means the bears are going to keep on getting squeezed. Technicals precede fundamentals. That's why I'm showing you things here. I'm trying to read the tea leaves before the fundamental changes happen. Now, Apple alone tonight, can it destroy this whole line? Yeah, it can damage it, but I'm telling you what I see right now. This is a gaping mouth. In other words, the lines are diverging, the percentage K and the percentage D, and they are still wanting to go higher. Just look at it visually. Once you have a topping process, that's a euphoria stage, and we're starting to feel that some members in the group are starting to talk about Apple at 160. They're trying to talk about Amazon at 1,000 and Google at 1,000. That's euphoric talk. There's nothing wrong with that. Your brain is now excited. You made some good money. You're like, okay, it's gonna go, it's gonna go, it's gonna go. That's where the bull trap comes in. Okay, they suck in the bulls and bang, the bears come in and maul them. We are in that process right now. We're not there yet. I believe that possibly will be the first part of May. It could be this weekend because the French election, the final round is there. What if Le Pen pulls ahead? You will see markets drop substantially and then pull a reverse and start to recover the losses. Those things are there. We'll talk about that as we get towards the latter part of the week. So that's it for now. Short and sweet. See you guys in the chat room. Keep up the good work. Thank you for the support. And all the new members, welcome. My service is a bit of a learning curve. Everyone's here to help. I'm there to help. But you need to do work on your end to make the real money. Thank you for listening. And remember, this ain't your grandpa's market, all right? This is the new paradigm, completely run by algorithmic high-frequency trading machines. If you do not understand all the tactical stuff that I'm showing, then you are not going to survive. Have a great day. Have a great week. God bless the USA.